I think infrastructure is definitely picking up, especially if we're thinking about public power and energy. This is a huge, factor, especially given the fact that we have rising oil prices, inflation, and it's becoming an electoral issue as well. And so we've actually seen bond issuance increase about 45% this quarter.
This is going to work. We're going to do it. We're going to have bonds, notes, and bills, and they're going to get paid, and nobody's going to go bankrupt, right?
Yep, and it's all in the public power space.
To me, it's new. It's a new feeling.
Yeah, exactly. Hey, Monica, we had a guest in here earlier, probably one of the best oil and gas voices out there in global Wall Street. He says get ready for $6 gas at the pump. Politically, that can't happen, can it?
Politically, it doesn't matter, right? It will happen if it happens. Wow. And so the thing is that if you're looking at the tools that we have to actually rein in gas prices, they're really limited.
Yeah.
Right? You could have that federal gas tax holiday they're talking about. You could release reserves from the SPR, but all of that has a short runway. It's maybe a 2 to 3 month impact at most, and you're looking at lowering it by cents, not dollars.
Yep. I think the consensus was going into the midterms that Democrats would do well, maybe really well. But boy, yesterday's kind of primary season, I mean, Kentucky, for example, where President Trump's candidate, defeated the longtime House member Thomas Massie. How do you think about that now? Did it change your view or did it change maybe the narrative, how midterms may look?
It doesn't change my expectation that the Democrats are likely to take the House. What's interesting about it to me isn't that Trump's candidate won, it's how he won. And that they had to put $33 million into that primary. That is notable because that means you don't spend that money unless it's competitive. That means that there is a potential split, and maybe that support isn't as strong as one might expect. Doesn't mean that the GOP won't do well in the midterms, but it does show that there is an underlying impact from all of this inflation and economic pressure.
Monica Guerra with us. We could do 3 hours just on New York City and infrastructure, or maybe your infrastructure headaches. I think of Phoenix with the whole build out of AI, or 7 data centers in, was it Huntington Bank in Ohio?
Sure,
yeah. Whatever the number. Let me go to your published work, which is actually quite serious, and this is the follow-on to bank regulation. Are our banks going to be less regulated with the back end of the Trump administration?
If we're thinking about what Trump has done really well in the financial services sector, it has been loosening regulation. That said, we have seen more regulation coming out from Congress. And contrary to folks' sort of intuition, right, that all regulation is bad for business, when you do have regulatory action that creates frameworks for doing business, it can be positive. And so what we've seen is that in the 24 months following financial regulation from Congress, you actually have financials up 10 to 11%. That's pretty notable. That's because they're coming in, they're addressing an issue, typically, and then when you marry that with a executive branch that has some of more of a deregulatory, hands-off approach, we think it's going to be positive.
I think that the ghost of conversations of 06, 07, 08, 09, and many of those conversations with Morgan Stanley management, boy, this sounds familiar. Are we re-regulating ourselves into another leverage build-out?
I don't think so, because you still are maintaining capital requirements for the G-SIBs at higher levels than they were during 2007. So that's an important differentiating factor here. They're not completely loosening the playing field. Where you're going to have a little more looseness is on the regional banks, but still, it's within a reasonable margin. So I think that Basel III Endgame is actually smart policy. And then when you look to Clarity, Genius Act, as well as movement that we're going to be expecting in the prediction markets, you're going to have frameworks that allow people to get to business.
So you're head of policy and geopolitical strategy at Morgan Stanley Wealth Management. What's the geopolitical strategy for getting out of this war in Iran, do you think? I mean, it seems like we're just in this cycle of we're not fighting, but we're not getting any peace either. Where are we on that?
I mean, we're between a rock and a hard place. I think that's apparent to anyone. One of the things that I'm looking to is how can the U.S. partner with NATO? So right now it seems that Trump isn't as willing, but I think that the positive action on the trade deal with the EU could potentially engender more positive conversations going forward. And then that means that there could be a joint presence in the Middle East. And I think that could be the key to us maintaining a strong infrastructure from a military perspective, but also being able to share the burden.